Americans are feeling slightly better about the U.S. economy this month, but concerns over the potential impact of President Trump's tariffs, that's still looming. Fresh new data shows the Consumer Confidence Index is up 2 points from June as the Federal Reserve is poised to make a decision on whether or not to cut interest rates today. Javier David is the business editor for the Dallas Morning News and a CBS News contributor and joins us now with more on the bigger picture. Javier, good morning to you. What can we interpret from this slight uptick in consumer confidence? Because I understand when you drill down on the data, there's some negative aspects as well.
Yeah, so it's a bit of a mixed bag. Incidentally, the IMF issued a report yesterday that showed that the global economy is weathering all of this tariff uncertainty despite all of the odds. And some of that is reflected in the confidence data. The headline figure rose and the measure for future expectations did too, but the present conditions index actually hit a 3-month low. So the confidence data reflects this dynamics that markets are signaling that they're resigned and are adapting to tariffs, which are the highest they've been in about 100 years. But they're really ambivalent about an economy that hasn't fallen off of a cliff, but just kind of keeps surprising to the upside, but still has a lot of negatives and just higher prices, which people continue to feel negative about. So the gauge itself is still below pre-pandemic levels, and that suggests that people are okay, but they're not great. And that highlights how consumers still feel pinched by higher prices and labor conditions, as the JOLTS data showed us yesterday, that are making it really difficult, if not impossible, for people to find new jobs.
So that's a bit of a gut check on how our viewers feel. But when it comes to the Fed's decision on whether or not to cut rates, they're looking at more than just feeling. So what else is in the data to help inform whether or not they do cut rates today?
Yeah, I mean, look, there's growing pressure on the central bank, and they're expected to hold steady. There's very little chance they're going to cut, but we may see something that we haven't seen in a while, which is at least two dissenting votes on the FOMC, who really have signaled in the last several days that they're prepared to cut. And part of that is kind of political. These two voters are people who vote support for lower rates, and they're also seen as potential contenders, jockeying to replace Chairman Powell, who we all know President Trump is ready to move on from. But regardless, we're setting the stage for what Wall Street hopes will be a rate cut in the fall. The Fed really wants to continue to defend price stability by lowering borrowing costs in a way that they want to avoid stimulating a new bout of inflation, even with this tariff, because the tariffs are such a mess. But there are cracks showing in the labor markets, like the JOLTS data showed us, right. And they can't forget the second part of that mandate, which is full employment.
So speaking more about that, the new data does show that the hiring rate has dropped. Job openings have taken a hit. You're referring to these as cracks, and you have a little bit of anxiety surrounding the labor market. So how does all of that shape the perception of what's really out there?
Yeah, the perception is just the labor market is in a weird stasis. Like the jobs data showed yesterday that there are worsening labor conditions since the fall. But through the first half of this year, the numbers have been trapped in a fairly narrow range. They're not rising or falling. They're just sort of there. And the takeaway is that employers and workers both are really being cautious about their next moves. It's not the YOLO jobs market that we saw after the pandemic. Jobs are being added and employers aren't mass firing. And that's good news, actually. But they're actually not falling all over themselves to sort of hire new bodies. And that's a real problem for experienced job switchers and entry-level workers who are really actively looking for new gigs.
Yeah, they're not really offering massive incentives to get new staff on board. Javier David, great to chat with you this morning, joining us from Dallas.